Bitcoin's on the move and it's on the way to the downside. So it's interesting to see that on the daily, we have wicked below the low of Monday, the 24th of June, and we have rebounded, but we are only 4.5 hours into the candle. So let's see how things are traveling on the hourly. So it's looking pretty gnarly. So as we built our biases from yesterday, we had one bias that we may have found some energy after wicking this liquidity grab and bouncing up, but that was the least case scenario. We were, I was considering that we were going to come down, retest, sweep some liquidity, come up, find weakness, and then fall away, and that is exactly what we've done. And there was not enough buying pressure to go up and take out these liquidity levels at resistance. There was just so much selling pressure that it was all downhill from here, and so that's what we look like. We came up, we swept the tiniest bit, which we basically just filled the imbalance of this candle, came down. We didn't even fill the imbalance of this candle, the 6 o'clock candle yesterday. We fell away. We swept this liquidity. There was still enough selling pressure that people obviously there wasn't enough buying pressure to come in and take this higher, and it all just collapsed away. So after taking this daily liquidity grab of yesterday, we swept through, we broke down through the 786, and then we've taken out this protected low of this entire impulse that our 786, 618 initial moves had from this low back on the 25th of June. So now with that out of the way, unless we find buying pressure here, then we may end up rebounding, or we may just find ourselves consolidating. It's a tricky one, I'm not going to lie. I'm not really sure what's going on, because we do have the awesome oscillator, which is our long-term trend. We are still in the negative, and we have returned bearish again. So even though we've come up, we've formed some higher highs, we are still bearish. We have converted back to bearish. We've got on the SMIO, we have, let's zoom in a little bit. So we have, it's interesting to see that we do have higher lows forming here. Now there's no guarantee that stands for anything, because we do have higher lows here, but this massive wick at 11 o'clock, this massive candle, sorry, has really made a massive impact, including the 12 o'clock candle. So that whole move took probably an hour and a half. Let's stop down into the half hours, the 30-minute, even less. Yeah, so we got 1, 2, 3, that's an hour and 20 minutes. Gave us that entire fall. There was enough buying pressure at 58. What was the low? 57, 877. And we've come up. We do have a little bit of a tail wick here, which is almost complete in a minute. But let's just zoom back out to the hours, because if we get too low, we get caught in the weeds, and we can't see where we are actually standing. So that move is complete, and that's the one that we predicted. So from here, let's have a look and see where we could potentially go. So in the short term, We have still seen a massive drop off. Normally there's the massive wick at the end, the massive candle at the end. That's where absolute exhaustion, the greatest amount of pain comes in. But let's just duck up to the daily and we'll see where we sit once again. So we can't 100% complete this one because this wick is only 4 hours old. We have still got this daily protected low, which if we break the 56,500, we are definitely in a downtrend. So we've broken through the 786 on the longer term daily impulse between this protected low and this high. So we are still within this, we are still within the longer term Fibonacci retracement. We are still just below the 786. As of yesterday, we were still bullish. We were curving slightly. We were starting to consolidate. Today we have converted to bearish, but that is still fresh. Like that. Yesterday we had finally completed a bearish. We had converted to the negative side, so we are now negative and bearish, not positive and bearish. So that was probably something we should have taken a little more attention to yesterday, but it did fulfill our bias. We already had the bias that we were moving down, but that was actually just added confluence to that. So with that being said, our two levels of target are the 56, 8, 56. That's down. That's a bit hard to see. Alright, so our next level of support is 57,600. Then we've got one level at 57,230. We've got a daily liquidity grab of 57,000, and our protected low is 56,600. So if we end up coming down below here, that's a real level where there is a lot of buying pressure. But if we break that, things are going to start getting everyone really freaked out. So what we're seeing here, let's just build out the bias once again. We are seeing higher lows, where here we are seeing lower lows. Currently we were seeing on the longer term time frame moving average, we were seeing higher lows, but perhaps this will be the lower low that we were anticipating, because we did see the lower low here, and then price came down, wicked through, gave us bullish context at that 786, tried to stay above the 786 Fibonacci retracement, and just fell through and just collapsed. So that gives us a lot of sentiment that there just wasn't enough strength there. So we need to find support through this liquidity area. As you can see, we've got 1, 2, 3, 4, 5 levels of liquidity zone in a real compact area where it's actually 4, sorry, I apologize. So that's our point of interest to go long. Is anywhere below there, unless we're able to. So here we've come up, fallen through. Perhaps we may come up and either retest these lows, which is my anticipation. Let me just draw that in a a better term. So we'll come down and then bounce up. Oh my gosh. Get rid of that one. We could, if this was the new low, perhaps we may come up, retest, and go up. Alternatively, we may come up, retest, and collapse. We may collapse right through. So we may come down to here, move up further. So we may collapse down through. Or with the hope that we go up. I think I would probably give this one a 50% chance, where we have found this is the low. I'd like to hope. Obviously, if we break this, liquidity grab, actually let's make it a daily liquidity grab. So understanding that it is only today's, but if we do sweep this liquidity grab of today, then we are definitely moving to the lower side. However, this is a real scary situation in the market that really flushes out a lot of orders. There was a lot of orders taken out, and let's have a look at the open interest at that time. Real quick refresh. And this morning, there was a 2-to-1 level of longs. So it was a 2-point ratio of longs to shorts. And so when everyone gets long, everyone chooses to be long. Someone with more money is going to bet against you and wipe you out. And that's where that aggregated open interest just got flushed out of the market. Everyone got stopped out under here. And then it's just a gentle, well, it's not gentle at all, it's a very aggressive reset to the market. Let's have a look at the long to short ratio now. Wow, we're even bullish even more. So we're 2.2, that's incredible. So as interest has gotten stronger and stronger, the market's gone lower and lower, and more people are getting bullish and bullish, which is very, very interesting. Definitely something to keep in mind. Alright, we can see on the liquidation chart of the aggregated BTC, so that's aggregated across all exchanges. There was a massive flush out of $14.5 million in longs. In shorts. So longs took out the liquidations there. Yeah, it's very interesting. Alright, cool. So just to recap, let's go back to the BTC chart. So my bias is that we are going to pretty much sit within this range to consolidate, because there's so much flushing out the market. We'll consolidate, and I think there is more of a bias that we are going to go up to the upside. However, now I've said that, this level, let's just put it as a So this is let's put it through as an imbalance mitigation level. So that's where the slow is. So the market has come down, rejected, gone back above the 786, and has collapsed straight through this low. So there is a potential level where the market may come up, touch the IML, the imbalance mitigation level, and then come down, find a little bit of support under here, some buying liquidity, and then rocket off. However, we may also come up, meet and fill this imbalance mitigation level, and then fall back through and then start to challenge these levels down here below the 57,000 level. Alright, that's it for today. Thanks for tuning in. Happy trading.